afternoon, everyone, and welcome to the broadcast of the Prism Forest School of Business. I'm Salome Chung. I'm a business strategist and the CEO of Prism for Enterprises. If you are listening or watching this broadcast, welcome, and thank you for your support as usual. And your comments and questions are welcome because that is how I know what you're responding to and what questions you have and what topics you would like for me to cover on this broadcast. Today, I am going to cover the topic of business credit. And for me, as a business owner, I thought business credit was personal credit with the word business in front of it. Not so. Business credit is really a financial tool that should enable business owners to access capital, goods, and services based on their creditworthiness. Much like personal credit, it plays a crucial role in growth and sustainability of your business. This allows you to establish trust with creditors, suppliers, and lenders. Building a strong business credit profile can unlock certain benefits, such as lower interest rates, higher credit limits, and increased opportunities for expansion and investment. And that's the important part, increased opportunities for expansion and investment. And that's going to be my focus today. And my guest today is going to help me navigate this business credit realm, of which I'm learning as well. My guest is Todd Miller of J. Galt. Todd is an expert on business credit, and Todd became an expert, well, in his experience. He understood the impact that a business and its finances and everything that comes with running a business, how much of an impact it can have on your personal credit and your personal life. In my conversations with Todd, his goal for getting into the business credit realm is really centered around having business owners not risk their personal credit, their personal life, their the way they're living, their standard of living by having your business impacted. If you, in his words, if we can make small and medium-sized businesses stronger, then we also build stronger communities and a stronger country. So I'd like to welcome Todd to the broadcast today. Todd, welcome. If I did not cover everything in my introduction, please tell the people, my audience, everyone in your world and my world, about your foray into business credit.
Well, thanks for having me on the show, Salome. I really appreciate it. I think you pretty much covered it to a T, other than the one small point that I had a business and I didn't know the difference between that personal credit or business credit either. And when the business failed, it landed me personally in bankruptcy court because I didn't separate the two, the business versus the personal. So that is what drives me every day and what I strive to inform and educate other business owners about, so they don't have to go through the same perils that I went through.
Awesome. And thank you, Todd, for sharing that personal story, because that occurs more often than we think and know. And as a business owner myself, I'm passionate also about providing business owners with the tools so they can avoid the pitfalls of whether it's credit, making bad decisions, not having the business structured in the way that they should. So my first question, Todd, is what is the importance of establishing and maintaining a strong business credit profile?
The most important part of it is one, the separation of personal finance versus business. Most people's misconception, like you said early in the introduction, is that business credit is just my personal with a B on it. Well, it's not. Your company's LLC or employer identification number is your business's social security number, and business credit can be built on your EIN.
Okay. Now for someone new to business or thinking of starting a business, what in your view is the first thing they should do when they're thinking of establishing business credit? I mean, for me, in my experience, when I started my business credit was the furthest thing from my mind. Didn't and this sounds naive and crazy, but I never thought I needed to have a separate business credit profile as it relates to business separate and apart of my personal credit. And I can't stress this enough because it's really, really important. How do I, as a business strategist, get business owners to, or prospective business owners to really acknowledge and learn the importance of business credit? What are the key factors that contribute to a business credit score, and how can a company improve their credit worthiness business-wise?
Business credit has to be built intentionally. Unlike personal credit, 93% of all business credit's not reported. So trying to do it alone, trying to figure out which 7% actually be imported or reported, excuse me, is going to be difficult. And most people don't know that there's actually a business credit scoring system. Unlike your personal FICO score, anywhere from 350 to 850, the business credit score is anywhere from 0 to 100. Just like on the personal side, you get above that 720 or better on a personal credit, all the banks want your money, right? You walk into a car dealership and sign and drive for a car with pretty much no money down and move on. Same thing as you get above the 70 to 80 on your Paydex score for your corporation. Same thing. All the banks are clamoring for your business. You're going to get the best interest rates available. And with business credit, you're going to get 10 to 100 times more credit than you would on your personal.
Awesome. Awesome. And that's important to know because as we've been really harping on, business credit is not personal credit. It couldn't be further from the truth.
Correct.
Now, if you are, as I mentioned before, entrepreneurs, particularly new business owners, small business, aren't familiar with the fact that business credit is important. Now, if you are a startup with no credit history at all, how do you establish your initial business credit profile? What would you suggest their first steps to be?
One of our first steps in our 7-step process is building your credibility foundation. So getting the checkpoints that all the lenders and banks look at, making sure your Secretary of State matches your filing matches with the IRS, making sure that you've got either a virtual business office or a location that doesn't show your personal address, so that you look credible in the eyes of the lenders. And that's just some of the checkpoints that most people have never heard of this company, but it's called LexisNexis. And what do? They collect data for banks and lenders. So making sure that 125 point data list that they look at and they check on every business when they send it over to a bank to approve or deny a business loan. You can start working on some of those key things yourself to make things easier as far as a startup goes. But, you know, in reality, we just had a member come on, just filed for his LLC, hasn't even earned his first dollar, but he's going to start building business credit because he understands that if I build business credit now, I'm way ahead of the power curve going forward.
Mhm.
So
Interesting that you say those simple little components and actions really can impact your ability to establish credit. It's kind of like your social media profile. You want to be telling one story, across all platforms. So in your business, you want to be telling the same story, your accounting practices, how you're registered with the Secretary of State, how you're filing your taxes, are you using the same name? So that, when the business credit, those things that pick up your business credit know it's the same person, and you start
correct.
to build rather than you're John Smith over here and your ABC plumbing over here, and you're someone else in your bank records are in another name. So it's really, really important that you get your ducks in a row. You're speaking the same language in every aspect of your business, and that's a good start. When I started looking into business credit originally, I was told that one of the best ways to start was as a business, the companies that you're purchasing from. So, for example, if you're purchasing supplies or stationery, whatever you need for your business, you should start purchasing it in the business name. Don't just run to Office Depot and buy printing paper, whip out your credit card, pay for it, and go on about your business. You always have to be present of mind when you're running a business. You go in, you're hopefully using your business checking account, business debit card, whatever it is. Those simple little things really can get you started. So when someone like you, Todd, come along, there's something for you to work with. Can you expand on that a little bit?
I'd love to. One of those things that you were just talking about that I like to talk to members about all the time is, you go into a bank as a startup or as you start in business because you're good at what you do. You're good at being a strategist and you're good at coaching, but nobody tells you about how to build business credit. So you go in, you apply for what you think is a business credit card, and they say, "Okay, Salome, no problem. I'm just going to need to have you check this box right here to use your personal social security number on it." And you think, "Oh, perfect, no problem." But I'm putting it in the business, so you won't really need my social. And then you get your card and it says Salome Chung, Prism 4 Enterprises below it. And you go, "Oh, okay, no big deal." Unbeknownst to you, the banks and the lenders are trying to mitigate risk and damages in case your business fails. And you're piercing your corporate veil by using that card because you've given them your personal social security number. So you've left your personal assets at risk. So, it's how the industry's been run for hundreds of years, and we're industry disruptors in that sense. But, I try to get that education out to business owners on some of those just key points like you're talking about. I'll give you another tidbit that most people don't understand. Do you know if you're using a Gmail or a Yahoo or any of the free email for your business, that's almost automatic denial on a business loan or business credit because it's free and you don't look like you're a credible company, and it's not tied to a website and it doesn't have your business name on it.
Right. johnsmith@gmail.com and Peter Brown at yahoo.com is not going to cut it. I have, people I come in contact with always ask me which email is the best email for you, because I have multiple emails, and which is something I should correct. But when I started out in business, I did exactly what you're talking about. It was a random name at what was the email back then?
AOL.com.
AOL.com or Hotmail. Remember Hotmail? I still have my Hotmail account
I
because
do too.
that's what everybody was using. But I quickly, if you really look at it, from a business perspective, look at it from the lender or someone who you're requesting credit from. Who's John Brown at at yahoo.com? Now, if you see Todd Miller at jgalt.com, that's a completely different thing, because that says this is someone who's invested into his business because his business is part of his brand. And now the lender or the funder feels a little more comfortable knowing that he's dealing with someone who's in the business for the long run, not just someone who's, I'm trying a thing, and if it works, it works. If it doesn't, it doesn't. So that gives you as a business owner more credibility, more stability, and gives the lender a little more faith in you as a risk, because you're a risk. And the more risk you can eliminate from your profile, the more opportunity you give the lender to deny you. The more you remove those, then you stand a better chance of getting the credit and the funding that you need. So
Correct.
absolutely. Todd, let's talk a little bit about the role business credit plays in getting financing. What types of options are available for businesses with stronger credit profiles? How is that, and how does that really impact a business? Because what I've learned from knowing you and my relationship with you is how important, not just how important building a business credit profile, a strong business credit profile, but how it can massively impact the longevity of your business. And I'm a big preacher of longevity and the things you can do to achieve longevity in your business. So having that strong credit profile, what effect is it going to have on obtaining financing and the types of financing that are available to someone with a stronger business credit profile?
Somebody that has a strong business credit profile, Salome, actually opens up all the doors to your longevity, like you said, because let's be honest, we know that most small to medium-sized businesses fail within the first 5 to 10 years. So it opens up, you asked about some of them, equipment financing, vehicle financing, 401k financing. I didn't think this was very important when I first started with JGalt, but accounts receivable financing. And then I started talking to a guy that does government contracts. And that becomes extremely important because they're paying on 90 to 120 days. So how are you making payroll if you're not getting paid on that job for 4 months down the road? So that's extremely important, because now it's opening up, okay, well, you've got AR financing, so you've got this money that's coming in. So this is opening up because you've got a strong business credit profile. Real estate financing, you want to buy your own building and put your office in there instead of renting and paying somebody else's mortgage on it. it opens up all the doors that, let's be honest, most people don't think about or talk about because we're not told or taught it from anybody in business. Just like me and you have had the conversation in the past. People know only what they've been told or taught, and most of the time it's bad information and it's not the right information.
Absolutely. And I want to follow up. I want to pick up on a couple things you mentioned. Uh, m- and I want to really stress it. When you speak about being able to buy a building rather than rent a building, I can't stress enough how much of an amazing impact that can have on a business. If you're able to purchase a vehicle in your business name, if you're able to buy a building rather than rent a building, if you're able to, you can pretty much call the shots. And if those are things that you can do, it really sets you apart from your competition because you're now way ahead of the game with being able to harness and command that kind of business financing via your strong business credit profile. You can if you need to expand your business in a certain way, and we haven't talked about that yet. If you're thinking of expanding, scaling, maybe opening up a new branch, maybe you want to acquire a smaller company, all of the business avenues all of a sudden opens up to you because you have that strong credit foundation.
You get an opportunity. It affords you the opportunity to take advantage of those opportunities when they're presented. Like you said, if you're going to grow and scale, and let's say Joe's plumbing down the street is really struggling, but he's got some equipment and he's got some good employees, and you can buy him out and gain more employees that are already skilled and trained, so you don't have to invest in that, and maybe buy his equipment, and now his customer base, now you've just doubled in size. Where if you're doing it the old fashioned way by bootstrapping it, you can't do that because I don't have any room on my personal credit to make those purchases. And you, instead of taking charge with the growth of the business, you're doing it very hesitantly because you're worried about what you can afford to do and where am I going to put, what's this going to do to my situation financially for the business.
Your choices are limited. There's certain things you can't even imagine doing because your business is not positioned to do it. Now, if you've got that strong foundation of a great business credit profile, and you can command the type of financing that you need to do whatever you need to do to take your business in whatever direction you want to take, then I can't stress enough how how strong and how amazing your positioning in your industry or in your market will be when you're a business that really puts some focus on your business credit. This is something, kind of like hiring a coach or having a strategist that a lot of businesses seem to think not important, and they don't prioritize those things until the business starts to get into trouble. The horse has already gone through the gate. It's going to cost you a lot more to correct the situation. So we're here to say, I'm talking to my viewers now, that this is something that you need to make a priority. You need to, if you haven't already done so, you need to start thinking about it. What business credit strategies you want to put in place for your business. because if you haven't done so, excuse me, you have to start now. I cannot stress how important that is. Having said that, though, I know most people are aware of the things that they're doing in their personal credit that impacts their personal credit. What are business owners doing? What are some of the things they're doing that negatively impacts their credit? And I want, Todd, for you to give us a few, maybe 2 or 3 that they're doing, or the ones you think are important that they're doing that's negatively impacting their credit, and what they can do to really correct what they're doing.
On their personal credit, Salome, or
On
on
their
their business credit?
credit, yeah.
Well, let's start out with some of the simplest things. People like we talked about earlier, Joe Smith Plumbing with Home Depot, and then they go over to another account and they file it as ABC Plumbing. Well, with business credit, 93% of it not being reported. If you're reporting here and then you're reporting over here at John Smith's Plumbing and you're reporting at Prism 4 Enterprises, they're not going to look for, I want to make sure we're reporting this to the right person for them. So that's going to negatively affect your credit right there, because they don't know who to report to. So they just report it based off what they have. And you may not be getting credit right there for an account that you've had open for a while since you've had your business. Some of the things that I see that has transferred over from personal to business is people have an account with somebody and they start to go get very conservative with their money. So they start closing their accounts. Well, they don't think about the accounts that they're closing. Yeah, they may be on their personal side, but you're closing those ones that you've had the longest that show the most history. And if you're closing those down, now you're pretty much wiping the slate clean. So now if you're going to go in to apply for a business loan and you've got, let's say you've got 2 credit cards in your personal name and they've been open for 6 months to a year, they don't have, they see that you had previous, but now that they don't have anything to draw off of. So, you don't have any strong foundation or credibility. So now you're starting to hedge those bets in their favor of just hitting the decline button. There again, a lot of it starts with fundability. And, some people can go out and get some of these business credit in their own EIN. And there's some real companies out there that you can start doing on your own without coming to a professional service like ours. Uline, Granger are both a couple members that are within our lender suite, or our vendors in our credit suite, that actually report to the bureaus. So, if you're going to do it, might as well do it and get credit for it, whether you want to grow and scale or whether you just want to be by yourself or have 2 or 3 people as owner operator and a couple family owned business. Go and let it start working for you. You're making the payments anyway, so why don't you make the payments on something that's going to work for you and start building you a foundation.
If you, Todd, let's use a startup as an example, and you have no money, which most startups don't, and using also your experience of using your personal to fund your business. A lot of times when you want to apply for a loan and you don't qualify, they'll say, well, you get a co-signer. Is that something that applies in business credit as well? Whether it's your partner, your personal partner, your business partner, whether it's you have more than one business partners. How does that work with with business credit? Sorry, when you're seeking a loan or funding, is that a strategy that you would recommend? Having someone else sign on, if that person is not associated with the business and have a good credit profile themselves?
No, I wouldn't recommend it. And here's one of the things that's a misnomer that I tell a lot of members, that you can be overextended on your personal credit. You can have gone through a bankruptcy. You can have edgy credit, because most do, because they use their personal credit so much that their debt to income ratios are so far out of whack that their business is holding their personal credit hostage. So most can't even buy a house. So no, you can build business credit even if your personal credit isn't so good. So I wouldn't suggest as a startup. I would still suggest start now. Start your business credit journey now, because when you do start getting the funds and the money's coming in fast and you think everything is great, you're way ahead of the game, because now you have the complete access to credit and capital that you will ever need for that longevity of your business. So when you hit year 5, and most people that have started a small business are out, you're not. You're one of the strongest, and you're actually buying those that are going out of business, because, oh, I can acquire this, I can acquire this, I can buy this, I've got that book of business. You're positioning yourself to be king of the mountain.
What are you hearing from your members, Todd, in post-COVID, in terms of what you just mentioned, the position that your business is in, especially when uncertain times come around? Is it your experience that a lot of businesses who are impacted from COVID and then needed funding or loans just was not in a position to do it?
Yeah, I'll give you some stats, and I'm kind of drawing off my memory on it, so I'm sure it's not exact, but at the end of Q4 for 2021, the banks were approving on an average of about 49% of all loans that businesses were applying for, which is pretty strong when you think about it. That's
pretty good.
1 out of 2 almost is being approved, hit the approved stamp. Fast forward to Q1 of 2023. Obviously, we know what the interest rates are doing, what the feds are doing, trying to slow down the inflation rate. That's dropped down to about 19%.
Wow.
So that's pretty quickly affecting. Here's another negative stat, but I use it as fuel for why I go to work and try to educate every day. Last year in 2023, 595,000 small businesses closed their doors, with an average of $83,000 of business debt crashing down on their personal assets. To me, that's 594,999 too many, right?
Can you repeat that again, please?
595,000 small businesses closed their doors 2022, with an average debt of $83,000 crashing down on their personal finances. I'll fast forward it to just Q1 of 2023. 300,000 small businesses closed their doors. So with the interest rates raising, with inflation raising, with competition obviously raising, it's affecting all of us. So the time is now to build your business credit, because if we have another COVID or you name it, it keeps you in business when they're closing the doors, and you're not losing your home because your business was closed by something that was outside of your control.
Mm-hmm. one of the things I preach in my commitment to business longevity is when I say to people, 90% of businesses are failing, people tend not to want to believe that that is a true statistic. They think it's just that, oh, you know, you're selling me a bill of goods. That cannot possibly be true. How can so many businesses be failing? Well, they are, and your statistics bear that out, because it is just what it is. Business, the fact that so many new businesses start is kind of masking the impact of the ones that are failing. It is very important for business owners, existing business owners who want to scale, have a successful, just business in general. So important to be aware of the fact that no matter how well you are doing, the chances for failure is always there. And there are certain strategies that you need to have in place to avoid this. Part of that is what I teach. Let me show you how to see the the writing on the wall. A part is what you do. Get your business credit right. So when everything hits the fan, you're in a position where you can say, here, Mr. Bank manager, or Mr. SBA, or whatever, or Mr. Venture Capitalist, this is the position I'm in. I need money. And you're able now to command whether your business lives or dies. And, you know, business owners, that's my challenge, Todd, and yours as well, is really to change the mindset of business owners. Because you're doing well, there's no guarantee. And even if you're doing well, you could be doing better. How about having the mindset of, I want to do better. I want to get from here to there. And these are the things I do, I need to do to get there. And having a strong business credit profile is one of them.
I agree. And, you know, that's one of those things. We all think small because we think within our budget. But, you know, do you think that the Amazons of the world thought that they would be, you know, just living out of their garage for the rest of their career? Or I'll throw you another one, Apple. I mean, maybe you might have heard of them. I think I've got one right here, and I'm on one right now. You know, but I'll give you an example of that too, Salmi. So there was a report out that Amazon has 1,158 different credit lenders in their business. So if Amazon's doing it, and you know as well as I do, Jeff Bezos ain't personally guaranteeing anything for Amazon. But if Amazon's doing it, and Nike does it, and Apple, and all these major corporations do it, isn't it time that those of us that are on Main Street start getting the same advantages that Wall Street's been taking advantage of for hundreds of years?
Absolutely. And it's all about awareness, right? And we have to really, and that's what this broadcast is about, is really pushing pushing the fact that this is so important. There are three main reasons business fail. And on top, one of those in the top three is funding. So you don't have money to support, scale, and grow your business, you're not going to make it in business. And at the heart of being able to procure funding, other than you know, being lucky and having a rich relative, or being financially stable yourself, that you're able to fund it. One of it is having the credit to be able to command that type of positioning. I can't stress it enough that business owners really are not focused as they should. Yeah, they think about credit, Todd, and they think about the importance of funding, but they're not doing the work as far as the foundation of getting of establishing good business credit. You know, I need to you can't build your house on sand and expect it to stand, because you when you think of a good business, and we talked about this at the beginning, you it can't be, yeah, you know, some people decide, you know, I'm just going to try and see if this works. But the minute you see it starting to work, you really need to get serious and have an actual business, not a side hustle that is John Smith at gmail.com and you go whip out your personal check and credit card to buy your business supplies at Home Depot. Uline is a great resource. Someone mentioned them to me, and they would send me their catalogs from time to time. And these are some of the things that business owners just don't know. And we go back to that popular phrase people are using nowadays: you don't know what you don't know. So my challenge, your challenge, is really to change minds, and to really get more visibility on this topic of business credit, and what is actually business credit, why it's important, and why it's necessary, having a good profile necessary for the longevity of your business. So before we close out, Todd, we've been talking for 45 minutes, so that's pretty good. Before you tell people how they can find you and how they can connect with you, at the end of every broadcast, I always ask this question: what would you, if you had to give yourself, Todd, one piece of advice before you started a business in terms of business credit, building a business, building a solid business, what would that be?
It's going to sound like a punch statement or a plug, but in reality, there's a better way to grow and fund your business. Build business credit right off the start and use other people's money so that your personal assets are protected from whatever happens in the business. Because I love talking with you, Salome, because you know stats and you're very focused on stats. You talked about it just a second ago about you start this side hustle and you start making some money. Well, let's fast forward that a little bit further. Let's play that scenario out. You start making some money and you forget about that financial plan. You got a business plan, you got everything else, but you don't think about the financial plan because money's coming in. 82% of all businesses close their doors because of cash flow casualties. They just straight run out of cash. How's that possible? I'm getting money here and there. I'm just going to elaborate a little more. And I know you've allowed me 45 minutes already. I've talked to multiple.
We're just going to go with the flow, Todd.
Okay. I was just to say.
This is a very important topic, and I can't stress the importance enough. And it's crucial. You just quoted that 82% figure. That is pretty darn scary. So, I'll allow time, but anything I can do to shine a light on how important this topic is. So you go ahead, Todd.
Okay. I was just gonna say, I'm hearing from a lot of the trades industries that pre-COVID, accounts receivables were anywhere from 30 to 60 days. You would think coming out of post-COVID, we'd be back down to that 30 to 60 days. It's actually vice versa. We're actually now 90 to 120 days before businesses are being paid. And there's your cash flow casualty right there. I'll give you an example, and I have to look up the notes, but um, so I had a member I was talking to the other day, been in business for well over 20 years and doing almost $1 million a year. And I said, tell me, how long is your normal accounts receivable? About approximately 60 days. I said, well, so you're doing pretty good versus the rest of the contractors and trades industries that I talk to. That's relatively good. Yeah. I said, but let me just throw this out there to you because I've got a formula as well. So you're carrying $147,945, and I can tell you the pennies, but in money for jobs that you've already done and moved on. So now somebody's holding $150,000 of your money, which is holding you captive, so you can't move forward to that next job or bid 2 more jobs down the road because you're waiting on this money to come down the pipeline that you've already done the job for. And I can go through these multiple times. That's your reality right there. That's your cash flow casualty. If you had access to a line of credit in your business name, instead of you using all your personal credit up to bid that next job, or maybe not be able to bid that next job because you can't afford the supplies. But if you had a line of credit that was 10 times the amount of your personal credit or 100 times, would you even think about what the accounts receivable were that were sitting on the books? Probably not as much as you would when it's on your personal credit, right?
No, you wouldn't be losing as much sleep over, not being able to speed up your accounts receivables because you have an option.
Right.
Ergo your solid business credit gives you that option to fund whatever it is you need for your business. And that right there, Todd, lies one of the main reasons for business failure. That 90% number is right there. It's not having access to not having a quicker turnover of capital and not having the strong business credit profile that gives you that flexibility in terms of funding. Man, we could talk about this for hours, but
Hours. And I think me and you have and multiple
yes,
conversations. And
yes.
like I said, I love talking with you because you are a numbers person, very statistics driven. And you have to use those statistics because they're facts. And unfortunately, they're scary facts when you start looking at it from my side of the business and even yours, because you're dealing with the same clients as I am.
Mhm. Absolutely. And our challenge, as I said before, is really changing mindset that you need to be proactive rather than always be reacting to the catastrophe that's coming, because it's not a matter of if, it's a matter of when. And you need to be prepared for the when. So thank you so much, Todd, for sharing today, for being my guest. I really do appreciate it. I have learned a lot from you, and I'm pretty sure my guests, my network, everyone in my world as well as yours will have received some real value from everything that you have shared today. So please tell the audience how they can connect with you, where they can find you, whether social media, LinkedIn, how would you like people to reach out to you?
You can reach me pretty much anywhere, but that's not gonna get it done. So my email is tmiller@jgalt.io, or you can call my direct number 208-871-0947. It's sitting right here next to me at all times. Or you can look me up on LinkedIn, like you said, and it's Todd Miller, and it'll say corporate credit behind it, because that's what I'm doing, is trying to rescue every small business and medium-sized business owners I can.
Okay, awesome. Thanks, Todd. And I will put your information in the comment section so that everyone who's watching or listening can go check Todd out. Believe me, you won't be sorry. This could be what saves your business. Believe me, it could be what saves your business from that 90% failure rate. And it's really crucial to the longevity of your business that you start really building that that business credit profile. So thanks again, Todd, for being here. And thank you to my audience for tuning in, whether you're listening or watching. I really do appreciate it. Please leave your comments. As I said before, subscribe to the channel, share this video or podcast recording with everyone in your world, anyone you might know who does have a business and or thinking of starting a business. This is very crucial information. Thank you again for being here. And until I see you again, same time, same place on the School of Small Business.